Hi, Jonathan York, my financial partners, looking at investment markets. Jobs data in the US still pretty strong. Came in at 236 versus 239, but also saw a revision upwards for the February number. That was revised up to 326 from 311. So it's still a pretty tight jobs market out there, despite the sort of layoffs that are coming through in some of the big techs. Now that's seen rates sort of edge up just slightly in that 10-year. That's up to 343, and the 2-year now is just above 405. But really, it's going to be a pretty big test for the markets this week. We've got the latest inflation data coming out with CPI and PPI, but also as well the start of the earnings season coming through as well. It looks like the big test will really be Friday US time when we get three of the big sort of banks reporting: JP Morgan, Citibank, Wells Fargo. What is interesting as well in the US, IPOs are pretty much sort of redundant now, and really haven't seen any major IPOs for quite a while now, and that's sort of helping some of the incumbents out there, because obviously with less sort of new companies coming to market, there's sort of less competition out there. Now, oil's still got a bit of a sort of a pop out of the sort of OPEC plus production cut. That's just trading just above 81 bucks a barrel. And the UK facing another major round of strikes and industrial action. Junior doctors are the latest, which potentially could have a 4-day strike. Now that's obviously pretty serious and pretty major for the UK Health Service. But what they're after is a 35% pay increase. Now that's obviously a pretty big number out there, and has some huge inflationary implications if that was granted. Now in the EU, while inflation does appear to be sort of falling, obviously the sort of recent hike from the ECB, and potentially another one on the cards at the next sort of meeting as well. But having survived the winter and the potential sort of issues with the energy crisis, now looking forward to sort of warmer months, and obviously the summer months and spending, holiday, etc. And it's really sort of hope that would give the European economies a major sort of boost. Obviously, the war in Ukraine is sort of dragging on, and that's starting to have a little bit of an impact on the sort of EU region. Because obviously that's having a major impact on the European region, and starting to see a few little sort of minor sort of protests about further aid coming to Ukraine. But as sort of discussed, really it's going to be pretty hard to see how Putin can extract himself of this with any sort of credibility. Because whichever way you want to cut and dice it, really been an unmitigated disaster for Russia, and pretty humiliating for President Putin. Now, interesting in Australia, after that Reserve Bank left rates on hold, seeing a huge sort of spike in consumer confidence. That was up 9.4% in the latest survey. Now that coupled with the sort of demand for minerals and resources, core metals out there, it's really sort of pushing the Australian economy along at a pretty good rate. Now here in New Zealand, after the Reserve Bank did sort of surprise markets and raised rates by 50 basis points to take the OCR to 5.25%. Now that's obviously seen house prices continue to fall as sort of mortgage rates do look to sort of edge up. But certainly the speed of the house price fall does appear to be sort of waning slightly. They've still got a pretty tight labour market here in New Zealand, and there's sort of a lot of call out there for sort of the immigration settings to be sort of revised. The issue is that it takes a while for that to sort of filter through and have a major sort of impact on the economy. And you could even argue that the government's a little bit behind the eight ball here. That really should have been done sort of 9 to 12 months ago. Also interesting as well, the government left the COVID settings unchanged with that sort of 7-day isolation period. Now obviously the cost of living crisis is still here, and it's still pretty tough out there, and it's just going to be interesting to see in the budget whether there is actually talk of any sort of tax cuts, or whether it would just be a potential sort of bribe that, if you vote us back in October, then potentially we can have some tax cuts down the road. In terms of the economy, certainly hospitality does appear to be sort of picking up a little bit. There's sort of plenty of money been spent over the long weekend for Easter. Now it's just a question whether they can keep that going over the next sort of 2 to 3 months. Now, if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.